All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today. But before I jump right into the first article, I just want to thank SillyStalk for being my very first Patreon subscriber. So that is in the link in the description below. If you guys want to support the channel, I would really appreciate that, because I know nobody wants to give up their crypto right now because everybody's just hodling and waiting for it to explode, which is going to be, look at my fake watch, any day now. But thank you for that, and I appreciate anybody supporting, because YouTubers, we're crypto traders and hodlers just like you, and unfortunately with the bear market, not as many people watching these days. But as soon as the prices go up, people are going to FOMO right back in, and everything will be okay. But the first thing I want to talk about is the executives of a Korean exchange were sentenced to jail for faking volume. So there's been a lot of articles recently of how many exchanges are actually faking volume, and the reason why they do this is so that they look better than another exchange, so that you might be enticed to put your cryptocurrency that you made on their exchange over another exchange, because they usually charge exorbitant fees in order to do that. So of course you're going to choose the exchange with the highest volume if you're going to do that, so that you can so that your coin can be traded the most. And a lot of articles coming out lately of how many exchanges are actually faking their volume. So two executives of South Korean cryptocurrency exchange Comid were sentenced to jail on Thursday for their roles in orchestrating fraudulent trade volume reports on their platform. So one of the executives is the CEO of the exchange, Choi Yunsuk. I got nothing. He received a 3-year sentence, while the other executive received a 2-year jail sentence. So 3 and 2 years, respectively, for doing this. So this is the first time a representative of a virtual currency exchange has been sentenced to prison for allegedly inflating trading volumes. Comid began operations on January 5th last year after beta test runs, and according to the court, Choi created more than 5 fake accounts in January last year and inflated trade volumes in both cryptocurrencies and Korean won on his exchange. The two were sentenced to prison for fraud, embezzlement, and misconduct. The charges from prosecutors outlined a scheme wherein the two defendants fabricated $5 million in transactions on their platform to deceive investors into thinking that the volume was natural. This led to the two earning about $45 million. This is also a suspicion that they utilized a bot to automatically create large orders, which attracted new users. The judge explained that Choi has committed fraud for a countless number of victims for a long period of time, and there is a need for punishment because the damage caused by the creation of false electronic records is large. However, eDaily reported that the judge took into account the fact that the damage was minimized as some funds were returned. In addition, he found that the defendants did not appear to have committed a crime with strong fraudulent intentions. I don't know about that. The crime has damaged customers' confidence in the virtual currency exchange and had a negative effect on the domestic virtual currency trading market. So they allegedly faked orders worth about $226 billion and sold 11,500 BTC to about 26,000 investors, and Upbit has denied their allegations. So there's a lot of exchanges lately that are denying fraudulent volume exchange, or fraudulent volume and faking volume reports. And again, it's all just to get other people to put their coins on it. It's not necessarily just to get their coins on it, because fake volume doesn't really make them any money. But what does make them a lot of money is the fees that they charge to actually put it on the exchange. So I made the cryptocurrency SotKo coin with just an ERC20 token. It was just for fun, just to make a video. And I actually contacted Stex. If you go to the exchange Stex and you scroll all the way down at the bottom, you can click on a listing, and you can actually list your token. And they actually agreed to list SotKo coin. I did not list it. Don't worry, I didn't list it. But their prices were pretty upfront, so it's like 1 BTC in order to list, with BTC pairing, and it's like such and such amount of Litecoin. So they're not too much, but exchanges like Binance, it could be $1 million. Some of them are 50,000. I've heard everywhere in between. So it does cost developers quite a bit of money to actually put your crypto on some of the bigger exchanges. Some of the smaller ones, some of them are free, but some of them aren't much, like maybe 1 BTC, which is not much compared to 50,000 or even $1 million to put it on there. So when you have higher volumes, you might choose that one instead, so that your coin is traded a lot. So moving on, Australian Bitcoin ATM startup says it's raking in 360,000 per week. So an Oscoin, an Australian Bitcoin ATM company, has reported a weekly turnaround of 360,000 in 2018. It's currently operating 31 ATMs throughout Australia, but it's planning to expand. Yeah, I would be too. So the company had an underwhelming ICO in 2018 after it managed to raise only 2 million of the project of 30 million. However, it hopes to expand the network of more than 1,200 Bitcoin ATMs across Australia. It's becoming increasingly easier for people to buy Bitcoin at a range of physical locations. And we believe the most significant barrier to entry for everyday people in the crypto market is accessibility. And I have to kind of agree with that. And I would say second most is definitely the, how to buy a wallet, how to put it in the wallet, how to send it to people, how to put it to an exchange. So there's a lot more than just accessibility, but I suppose that is a quite significant barrier. So Bitcoin has reported that the number of Bitcoin ATMs has doubled in 2018, grown to more than 4,000 in 76 countries. And at the beginning of the month, France started selling Bitcoin at tobacco shops, which is the plan is to expand buying Bitcoin to 24,000 tobacco kiosks. And just a couple of days ago, US-based Bitcoin ATM company CoinMe partnered up with international coin counter Coinstar, and the initiative has enabled users to buy Bitcoin at 20,000 Coinstar kiosk locations. So Coinstar, if you're from America, it's everywhere, literally. If you go into a Walmart, there's always a Coinstar kiosk somewhere in there. It's usually by like the customer service, and you bring in your coins, and there's always somebody just pouring coins into the machine. It counts them yourself. You get a receipt. You take it to the counter, and if you had $100 in change, they give you $100. But you can't use your change to buy the Bitcoin from a Coinstar. You have to actually essentially cash your change out, then get the money, and then put actual dollar bills into the machine to get your Bitcoin, which I still think is pretty amazing and, might convince a few other people to start investing into Bitcoin. Who knows? Turn your spare change into Bitcoin. Why not? Considering that if you have a bucket of spare change around, it's sort of free money at that point. Because you were saving it for so long, and it's not like you were spending it. So, hey, free money into Bitcoin. Why not? Probably a better investment than your change itself. Venezuela is the first Bitcoin ATM will open in 2 weeks. So in an interview with local radio and news media network, Panama-based crypto buyer said the machine had already arrived in the country's capital, Caracas, and we're going to install the first ATM in Venezuela over the course of the next 2 weeks. So we already have the equipment physically installed. It's in its final stage, and we will begin making an announcement on social networks. So, as Bitcoin variously reported, a toxic mixture of hyperinflation, travel, and forex restrictions have made life for the average citizen impossible. At the same time, Venezuelan governments have pushed an agenda involving its state-issued cryptocurrency Petro, recently beginning to require certain payments, such as passports, only use the asset. So, yeah, the Petro, it's a funny joke. Petro has had a dubious reputation since inception. Yeah, you think so? I would say that's an understatement. Reports claiming that despite its peg to Venezuela's $6 billion oil float, its backer in the form of state oil company has 45 billion debts, which undermine its status as a store of value. It is thus little surprise that the peer-to-peer Bitcoin trading has exploded, especially in over the last 6 months of 2018. According to the latest data from Coinbase, the week ending January 5th was the second busiest on record for the Venezuelan bolivar on local Bitcoins, with a total of 5.15 billion changing hands. This has followed a dramatic drop for the week ending in January 12th, with social media commentators reporting the service was no longer accessible from inside Venezuela. Well, that makes a lot of sense. So, with this Bitcoin ATM coming in Venezuela, I wonder if the government is just going to get rid of it, or somebody's going to destroy it, or something like that. From the government, you know what I mean? Definitely not from the government. I mean, you see this move. So if they're going to take away local Bitcoins because they want everybody to buy the Petro, I don't know how long this ATM will last, but it is a good idea, or at least a good idea for the people. So you can see the local Bitcoins, it just absolutely exploded very recently because Venezuelan bolivar is essentially completely hyperinflated, and it takes a whole barrel of bolivars to basically buy just about anything. And it's pretty bad in Venezuela, so people are taking that bolivar that's virtually useless and buying as much Bitcoin as they can with it. And hopefully, for everybody's sake, Bitcoin goes up in price and helps out everybody in the world in that way. So the final article, lack of ETNs keeps Wall Street away from Bitcoin. So the Ed Tilly, the CEO, president, and chairman of the Chicago Board Options Exchange (CBOE), declared that there is a need for Bitcoin ETNs, exchange traded notes, in order for Wall Street institutional investors to join the crypto space. According to the aforementioned article, Tilly declared that the growth of Bitcoin in listed markets is still hamstrung by the lack of a trading product geared toward mom and pop investors. According to him, Bitcoin futures did not see substantial growth because of the lack of a note or tracker tied to Bitcoin that retail customers could trade, especially considering, CBOE, you didn't even trade Bitcoin. It was just on paper. So get your shit together. The article elaborates that both futures and trading exchange-traded notes are important for offering access points to Wall Street-type investors. According to the article, Tilly explained that ETNs are more accessible to the average investor compared to futures because of their lower barrier for entry. He continued that the power of having that future there is also having an ETN that is more attractive to retail, and then institutions can lay that risk off on the listed futures market. Oh, wow, good job. Absent that leg in introducing trackers or notes, I think we will be in this. It trades every day, but it is not the story. So this is kind of exactly why we need backed futures, because they trade actual Bitcoin. They've got delayed from January 24th, and who knows, it's going to probably be in late February now before they actually start. Whereas CBOE and most of these other ones trade more Bitcoin than actually can exist in existence, just because they trade it with paper, and then they give you money, you give them money, you get money. So it's essentially like betting on a horse race, if anything. There is no real, actual thing that you're betting on aside from the horse winning or not. And then you get money or you lose your money. And that's basically CBOE and CBE futures. There is no Bitcoin. There never was any Bitcoin. You're just essentially betting on the price, and I don't think people got that for quite a while. Whereas backed futures, they're actually going to hold the Bitcoin. You're actually going to give them Bitcoin or buy Bitcoin and receive Bitcoin. So according to Tilly, the reason why regulators did not approve a Bitcoin exchange-traded product, such as the still pending exchange-traded fund ETF applications, is that regulators cannot protect investors from manipulation on a market they cannot control. You shouldn't be able to control the stock market either. So that see this article. The reason why I'm reading this article is because it really delves into Wall Street without actually saying it. If they can't control the market, they don't want it, right? So if you're controlling the market, isn't that not good? Isn't that illegal in a way? Nah, not to them, though. You answer that question, you get your first ETN. As Telegraph recently reported, crypto entrepreneur and regulator contributor to CNBC, Brian Kelly, claimed that there is no chance for a Bitcoin ETF approval in 2019. Also, recently, news broke that the cryptocurrency index fund provider Bitwise Asset Management has applied with the United States Securities and Exchange Commission to launch a new Bitcoin exchange-traded fund. So, is the investments coming? Is the institutional investments coming? We need Paul Revere just riding on his horse saying, the institutional investors are coming, they're coming, and then everybody looks in the distance and nothing is coming. Except for backed futures, which continuously is getting delayed, not through their own fault, but through the fault of the SEC. Doesn't help that the U.S. government shutdown is preventing the SEC from even beginning the process of starting to audit them, for their functionality and legitness, I guess. But anyway, so moving on to a little bit of CoinMarketCap and just a tiny little bit of I told you so. Not that anybody didn't believe me. So the other day, pretty much every day at the end of my videos, I say that every time there is a whale pump, it's going to dump by a relatively equal amount. As you can see here, we got a wall right there for about 120. We got a wall here for about 100, and let's call it another 150 or 20. And then we got this today, where all the whales decided to sell off after a little while. And what they like to do here is create a little Bart Simpson. We got a little Bart right here, and what they'll do is they'll buy in a whole bunch. They'll buy it over the counter, then they'll, or they'll buy it on an exchange or multiple exchanges, pump the price, average price, then they'll see where it's going to go from there. And then once the price is up, you can actually just use futures to, or margin trading or something like that, to basically bet on the fall of Bitcoin, which is certainly going to happen most of the time anyway after a whale purchase like this. So if you guys are day traders or you're looking to get into day trading or anything like that, you guys can take a look at these charts and just know that when you see something like this, a day later, a day or two later, something like this is going to happen with a little fall off. This one was a little disproportional, but you can see that it kind of dipped a little bit before that. and then we had this one, and this was on January 19th, right at the beginning, actually, sort of just a few hours after the turn of the day, and within a day and a half, we have the same dip. So if you buy into Bitcoin somewhere around here and you see one of these and you sell off immediately, typically you'll be able to pick it back up a day and a half, 2 days later, as long as you have some a little bit of patience to pick it back up for $200 cheaper, and then you pick up more Bitcoin and you can just do it again and again. So this has been happening for almost a year now. Now, we've been in a slow decline for about a year, but you could see, you can't quite see it. If you move in a little bit, even just a month, you could probably see we got this, we got this, we got this. And generally, it's been going down for quite a while since December, so this is the 1 month. But you can kind of see how this happens a little bit. That there's just always, when you see the Bart Simpson, there's always going to be some kind of sell-off right after. And it might be proportionate, it might be disproportionate, but either way, it's a fairly good day trading tool. So we're at 120 billion market cap. We can see pretty much bleeding all over the place here. And other than that, nothing too crazy to talk about with CoinMarketCap, except for the Bart Simpsons all over the place. But that's all I have for you guys today. Make sure you subscribe to the channel, like the channel, or like the video. That helps out a lot. In the description below is all my social media, my Twitch, my Twitter, my Steam, everything in between, and my Patreon. So again, the very first Patreon subscriber. I've had that Patreon for a very long time, and it was the very first person that's ever actually donated specifically to the Patreon. So I thank you, SillyStalk, and anybody else that wants to support the channel. Even just $1, sort of like a regular $1 a month to the channel, can help the channel a lot, and can kind of help me continue doing this and upgrade equipment or anything like that. But I appreciate you guys watching, and as usual, I will see you guys next time.